Welcome back, guys, to part number 2 of this break and retest strategy course. Now, this is where it's going to get very exciting, because now that we looked at the theoretical things, it's actually time to get into the practical things, and I'll show you how to actually apply the break and retest concept and how to actually trade this as a trading strategy. So as you can see here, part number 2 is divided up into 3 different parts, where we are first going to look at setting up trades using the break and retest. And this is where we are basically going to break down everything in terms of entry, triggers, stop loss placement, take profit strategies, and all that. And then also some variations of some variations so that you can adjust it to your own trading style. And then of course, we're going to talk a little bit about risk management approach. And then on the second part here, we are going to talk about common mistakes and how to avoid them, which is obviously very important. But this is something that you have to learn throughout your journey using this strategy. And of course, you're going to be using a trading journal when doing this, and getting statistics and going through everything to make sure that the mistakes that you're doing, you need to identify the mistakes and make sure that you can avoid them. And I'm going to help you with that in part number 2 here. And then on 3, the final part of this applying the break and retest strategy, we are going to look at break and retest setup examples. I'll show you some real life examples and some trade that I currently have open at the moment as well. So yeah, let's just dive right into it, and we're going to look at how to set up the trades using what you've just learned. On the very first, you see right here, it says identify, confirm, and execute. And that's exactly what I'm going to show you now. First, you identify the break and retest setup, then you confirm that you want to enter, and that's the time when you execute. So let's talk a little bit about that, and let's go into TradingView to take a look at some examples. First, we have to identify, and that means not only identify the break and retest, but we have to identify a good level in the markets. Because remember, the break and retest is all about first having a breakout. And what do you need for a breakout to happen? Well, obviously you need a level to actually break. So let's first identify a level. And I'm just gonna look at this right here. Let's go to the line tool here, the line chart. Let's just encapsulate this area right here. I think that looks pretty good on the line chart. And then on the candlestick chart, we have that. So we have identified a horizontal level. That's step number 1. Now, it doesn't have to be horizontal level, but like I said previously, we're going to focus on horizontal levels here. Now, you know that it can be on the trend line, channel, EMA, or whatever. But for this example and this specific strategy, we are going to look at horizontal levels. So number 1, horizontal level. Number 2, breakout. That's the breakout. And what did I talk about previously? We need a clean breakout. Do we have a clean breakout? Well, you'd be the judge of that. What a clean breakout looks like. We talked about that in the previous part of the course. Is this a clean breakout? Yes, it's the clean breakout. Why is it a clean breakout? Well, because we broke above that one. We broke above that one with one candle. There is nothing, there's just one candle going straight through the level and closing well above the level. Okay. So what have we done now? We identify a horizontal level. We have identified a clean breakout. And for the retest to happen, we need a clean rounded retest. And the entry needs to happen on the first retest. Clean rounded retest means we have a clean breakout and a rounded price action before the retest. It also means that there should not be any retest of the breakout level before the first retest, which means no immediate retest. Immediate retest would be if this wick goes down here. We're not seeing that, okay? Horizontal level, clean breakout. Do we have a clean rounded retest? Yes, we do have a clean rounded retest. We have enough, we have multiple 4-hour candles closing. It doesn't matter if it's 4-hour or whatever, but we have multiple candles opening and closing between the breakout and the retest. Okay, this is now the retest. We have now identified all the steps in the part of identification. Now we move on to confirmation. Okay, so what is confirmation? Well, you need confirmation that price is reacting to this area as support, because remember, we're looking at a horizontal level, a resistance level. Price is breaking the resistance level to the upside, and now we assume, well, we know there's a probability that this previous resistance area is now going to act as support, and we need some sort of confirmation for that to happen. I'm gonna be sticking on the 4 hour here on this time frame, and I'm simply just gonna say a confirmation for this level to act as support is simply to see some sort of bullish reaction on this level, perhaps a bullish candle on the 4 hour. Preferably, what I like to use in this strategy is a bullish engulfing candle. So imagine if the next candle is a bullish engulfing candle. Let's go to the next one. Well, that is obviously a bullish engulfing candle. It's a very strong bullish reaction to this level right here, and that in this case would be our confirmation. Okay, now that we have confirmation, we know that this level is acting as support as expected. We have the breakout, the retest, confirmation. It's now time to execute. For this example, what does execute actually mean? Well, we're going to be entering on the close of this candle. That's the plan. And then of course, when you get the breakout, or even prior to getting the breakout, you need to plan your trade. So let me show you what my plan of the trade would look like. Okay, so let's say we get a breakout and I want to see a bounce down somewhere in this area, and I want to TP at the first trouble area. So let me just walk you through this setup, and then I'm gonna break it down in detail and tell you exactly what I'm talking about in every step of this process. So we first identified the breakout. Now I want to go long somewhere around this area, and I want to TP at wherever the high of this move is, because that's going to be my FTA, the first trouble area. Where's the high? Well, let's see. Price is now going down, and that is going to be the high of that move, so that wick. Okay, and where is this idea going to be invalidated? Well, it's probably going to be invalidated if price goes below these lows. So I'm going to place my stop loss below that wick. Now the risk to reward of this trade is not great. It's not great. It's 1.11, and with the win rate of this system being around 50%, I would say you would want to look for trades that are closer to 2R or higher. So the risk to reward of this trade is not really favorable. But if you wait for confirmation, remember we talked about you can place your limit orders right here, because now you know you have the breakout, and if price hits this level, you have a clean rounded retest. So you can place limit orders for a trade like this, or you wait for confirmation. And the beauty of waiting for confirmation is you then have the option of placing your stop loss below the structure that confirmed the trade. Okay, so with limit orders, you usually have lower win rate and lower risk to reward. So I would not recommend you placing limit orders without confirmation. This system is best traded with confirmation, and like I said, a good confirmation to look for is a bullish engulfing candle at the level, or a low time frame break of structure at the level. I'm going to talk more about that, exactly what that looked like. Well, let's wait for that bullish engulfing candle. Now that's a bullish engulfing candle right here, and you then want to perhaps enter on the close of that bullish engulfing candle, and now you can look at the low of this structure as your invalidation of the trade. So that's where you want to put your stop loss, below that wick that created confirmation move basically. Now as you can see, the risk to reward on this is still not great. It's only 1R, but as you can see, it turned out quite nicely, and it also, it kept moving higher. In this scenario, what I like to do is I like to incorporate the multi-time frame analysis. So one way of trading this system, very simply, is just looking at one time frame and looking at that as your FTA and your first trouble area, and you can also go and look at the higher time frames to incorporate more higher time frame levels as your targets, and I'm going to be talking about that shortly in the next session. So obviously, as you can see here, using the local high here, the FTA only creates a risk reward of 1, which is obviously not that great. So let me go into the idea of using a multi-time frame analysis to see if we can find higher time frame levels where this might, where there's a probability of this move hitting sometime in the future. So let's go to the well, let's zoom out here first on the 4-hour, and we can we're gonna look at high time frame levels to the left. And now we've zoomed out quite a bit on the 4-hour, so it makes more sense to go to the daily. So now we're on the daily, and we're going to see if we can find any levels here to the upside. So first, I just want to make a horizontal line here to make sure that I know where our horizontal level is that we're trading. So we can see here on the daily that we have a few levels that I'm going to be looking at. And we can switch to the line chart to make it easier to find a level as well. Now, what I see here is first we have a level here, and that aligns with this area, and that aligns with kind of like these areas right here. What happens if we add a horizontal line that goes through this level? Something like that, right? Let's go back to the setup, see where that level is. And it looks like that level is actually where we have the FTA on the 4-hour level. Okay, so that level is actually in perfect confluence with the FTA. So we are looking for higher levels. Once again, we go to the daily, go to the line chart. We want to find clear resistance. Where do we have clear resistance? And I think we could be looking at this level. But if I put a horizontal level on that one, you can kind of see how price have reached that level right there, clear resistance, and then you can easily create a zone here. And if you extend this zone, you'll see that it's most likely going to hit that left area as well. You can even move to the weekly, and we can see that this is also a very strong weekly level as well. Back to the daily, back to the candlesticks. Let's go back to the 4-hour and back to our setup. And now we know that this level above is a good high time frame level. So in this case here, it's important to note that we are, and here I've looked at the 4-hour for the actual break and retest setup, and our entry is based on the 4-hour. But again, the idea here is that the break and retest concept and the break and retest system works on most markets and on most time frames. And when using a multi-time frame approach, you can look at the break and retest for an entry on the 5 or maybe even the 15-minute, and then look at high time frame levels on the 4-hour or daily. So it doesn't really matter what time frames you're using, but here we are using a 4-hour as our entry time frame, and then we're looking at higher time frame levels for targets on the daily and weekly. That's one target, right? But it's also important to understand that even though we have a high time frame target there, we need to make sure that we incorporate the FTA into our system. We need to incorporate the FTA into the way of trading. And the way I do that is to always make sure that I take some profits at the FTA, which in this case would be TP1. And the way I do it using this system is I exit 50% at TP1 and then 50% at TP2, which means that my average exit of the trade will be between these two levels, and that is around 2R. So the middle line between these two, that will be where I exit. My average X will be, and that would be 2R, which is, that's good, that's great. With a 50% win rate, having trades that are 2R is absolutely acceptable. Now it's up to you what type of trade management system or trade management style you're going to be using. You can take profits 25% here and then 75% here, which means you will have a bigger average exit. So it's, in this case, 2.5. And you also have to decide when TP1 is hit. What are you going to do when TP1 is hit? There's two ways of doing this. First is the set and forget approach. This means that when you enter the trade, you put in your stop loss and your TPs, and then you do nothing. The idea of set and forget is that you put in all the orders and either all TPs get hit or some TPs get hit or the stop loss get hit. You never move stop loss, okay? That's the set and forget approach. You never move stop loss and you never exit manually. You always either have stop loss getting hit or TP getting hit. That's the why I'm trading this system, and I have been having very good results with the set and forget, because what you do with the set and forget approach is you remove all trade management. And for most new traders, trade management is where they make mistakes. They exit too early, they exit too late, they close trades as losers that would have been winners and stuff like that. So set and forget is a very good approach to begin with. So when we start using this system, I would highly recommend that you start with the set and forget approach, and then you look at your trading journal statistics and you go through all the trades and you see, could I have managed these trades differently for more profitability? And you don't have to use multiple TPs. It's highly recommended that you do use FTA as at least one of your TPs. If you can get a good risk to reward with using FTA as your only TP, as your only target, you would use that. So that's set and forget. And another way of trading would be to have multiple TPs, and when TP1 gets hit, you move stops to entry, okay? And that's basically your securing the trade. What I've seen most of the time, you'll get something like this. TP1 hit, move stops to entry, stopped out, boom. It's very normal, and that's why in my case, using the set and forget approach, at least when starting out with this system, is what I think is the best. Another way of trading this system is by simply moving your stops up only if there is a higher low in the trend. When going long, you look for higher lows. When going short, obviously you look for lower highs. But in this case, we're going long, so we're going to be looking for higher lows. This is a low, this is a higher low, this is a higher low area, this is a higher low. What if price does this? TP1 hit, goes down, and then back up. This is now a higher low, and that's where you move stop loss to. If you are going to move your stop loss to entry, I would highly recommend that you only do so if the technicals align, which means that if there's a higher low above entry, then you can move stops below that higher low, because otherwise what you're doing is you're not trading price action, you're basically trading your emotions. You're moving stops to entry because it feels good to do so. Again, the set and forget approach is the best way of starting out with this system, because then you can go into your journal, look at your trades and see if it actually works or not, and then adjust your trade management according to what your trading data in your journal tells you. All right, so far it's very simple, right? And when you look at one time frame like this, it's surprisingly simple. You basically just look for horizontal levels, the breakout, the clean rounded retest. You look for the first retest, and if there's a bullish engulfing candle, this is a good confirmation of a bounce. And if your risk, if the risk to reward of the trade allows for it, it's best to have the stop loss below the previous low, the low of the move that broke the level, like this. I'm gonna look at more examples shortly. But can we make the system better? Can we get very high risk to reward setups with something like this? And the answer is, of course, you can. You can with using a low time frame entry system. All right, so we're going to be looking at this trade once again. We're going to be using the replay function, and we're going to be looking at this trade once again. Now imagine if imagine you're down in your office, you're drinking your $1 million coffee, smoking your $1 million cigars, because that's what we do, right? That's what we do as traders. Joking, of course. So you're down in your office and you're looking at this and you're saying, all right, we got that breakout, we're waiting for that retest, we have an alert down here, and then we get boom, we have the alert, and now it's time to focus. It's time to get hyper focused, and it's time to go into the lower time frames. We're now on the 4 hour. It's now time to go into the 15-minute. Okay, we're now down in the 15-minute, and on the 15-minute, we want to see something similar to a bullish engulfing candle on the 4-hour. But we want this downtrend to shift. Okay, so we want to see a break of structure of this downtrend. So this is now the downtrend that we're looking at, right? It goes like this, and it goes all the way down here. Will we get a bounce? Probably. And we see that price is now reacting very nicely to this level, and we can see now that it sort of starts to trade like a range down here on the 15-minute. What if we go down to the 5-minute? Right, so you now see a fairly clean range here. So you have a downtrend, and then you have a range here on the 5-minute. What if I put a horizontal level here? And what if we apply the break and retest system to the lower time frames within a level where we have a break and retest on the higher time frames? We know that price is hitting 4-hour level. We now have a break and retest it's activated, right? We know that this is a level where we want to buy, but we want to look for more confirmation. What if we look for a break and retest of this level? Now, actually, I have to run this replay in advance. I have no idea what price is going to do here, but that's basically the idea that I would be looking for. Either a breakout, so a breakout above this level will also kind of confirm this, because that means we have a bullish reaction in this area, and that's basically what we were looking for, right? Let's see if we get something here. Still ranging, and that's a breakout, right? Now, the best case scenario is for us to get a break and retest of this low time frame level. But honestly, looking at the 15-minute, this looks good. This still looks like a good confirmation. We can go all the way out to the 1-hour. Look at the 1-hour. We have a nice confirmation here on the 1-hour as well, because on the 1-hour we have that nice bullish candle breaks above the level right here. So I would say that on the 1-hour we have a good bullish candle as confirmation on the 1-hour right here. We had on the 15-minute, we kind of have that breakout. Let's see, the next candle is the next 15-minute candle that is going to close is going to be the 1-hour candle. So I assume that that's going to be the 1-hour candle closing, and it's also breaking the 15-minute. So what if we enter on the close of the 1-hour candle? Okay, now we can put stop loss below these wicks, and this trade now up to FTA all of a sudden becomes a 3.49R trade, and this, in my opinion, is the absolute best way of trading this system. Now, going back to the 4-hour, look at this. The 4-hour candle as a bullish engulfing candle closes all the way up here, and remember, the risk to reward was only 1. But then if we looked at this level from a 4-hour perspective and we said, you know what, we have the break, we have the retest, we have a clean breakout, a clean rounded retest, and we're hitting the level. What if we look for confirmation in the lower time frames? We only really had to go one time frame lower to find that confirmation on the 1-hour, and that is that bullish engulfing candle right here. Now look at price action here. We are getting a very nice, good looking, that rounded price action that we want to see at the level of interest. And this rounded price action on the 1-hour, remember, it's still a downtrend on the 1-hour, but then looking at the 15-minute, I think this looked quite obvious, right? So it all makes sense here on the lower time frames, and this, ladies and gentlemen, is the best way, in my opinion, of trading the break and retest. So you look for higher time frame level. When you have the break and retest on the higher time frame level, you'll go into the lower time frames and you look for confirmation on the lower time frames. And in this case, you want to be using the first trouble area as your TP, and you want to be looking at your stop loss to be placed below the low that created the confirmation structure, basically. But remember, by looking at the higher time frames, we still have some good levels above. Now imagine that you can exit 50% here at TP1 and then 50% at your TP2, which is of course likely, not as likely as FTA hitting, but definitely likely. Your average risk to reward of this trade would be between 5 and 6, which is obviously very high. If you have that win rate of 50% with a trade that has somewhere between 5 and 6R, you are going to be very, very profitable. Now, of course, you're not going to have a 50% win rate using this system in the beginning. You're probably going to have closer to 30 or 40. But again, with a win rate like this, you are going to be profitable even with a win rate of as low as 30 to 40%. Now, one final thing I want to say about the FTA. When taking profits at the FTA, you want to make sure that it's not at the exact high. Because if this is going to be the level where price is going to get rejected, do you really think it's going to hit that level perfectly? Not really. Not very often that happens. Usually you have to front run that level a little bit. So something like that. What I like to do is I like to look at the candle closes. So on the 4 hour, that's going to be this one right here. And even with that low time frame entry, that would be a 2.8. So I like to look at 4 hour candle closes that is closest to the FTA and then use that level. We can also look at the 1 hour, okay? And on the 1 hour, it aligns perfectly as well. So that would be your FTA. Now remember, this is a 2.8R trade with only having that as your FTA. And that is very much a good trade, right? But if you're going to have the approach of, so I would either exit fully here, or I would put that level as my TP1 and then TP2 all the way up here. Now you can have multiple TPs, you know, you can make them run higher with multiple TPs and divide your position up. But I would just recommend that if you get good risk to reward to FTA, probably best to exit fully at that area. All right, so now you know how to identify the break and retest, you know how to look for entry confirmations on the 4 hour, you know how to go into the lower time frames as well. All right, so now we now talked about how we are identifying a good looking setup, we're confirming, and then we're executing. And I've also talked about using the set and forget approach, or moving your stop loss with either new higher highs, higher lows if going long, or moving stop loss to entry at TP1 getting hit. Again, go with the set and forget approach when starting out, and then you adjust depending on what the data and the statistic of your journal and what fits your trading style better. Now let's talk a little bit about a risk management approach. Now, of course, there's a lot of talk about when it comes to risk management, and it's quite a personal journey to understand what risk management approach you should have. But for me, I want to focus here on risk management and trade management. So again, you want to make sure that you do not move that stop loss too actively. Remember, the break and retest system and strategy is based on the fact that you have a breakout and then you have a high of that breakout move. That bounce takes you all the way up on the retest of the breakout area for resistance. Your focus should be the high of that breakout move. So the idea is for price to move back up to the high of that breakout move, for that to be your FTA. And your risk management approach is basically based around the idea of your trade idea is invalidated if price never bounces on the level, and that's why I want to wait for confirmation. And it's also based on the fact that it only bounces a little bit and then it moves back below the level. So you want to make sure that your stop loss placement when waiting for confirmation is below the confirmation area, or all the way down at the beginning of the breakout move. And we're going to be looking at this more in the break and retest setup examples later. What I do when with the risk management approach that I have is I risk 0.25% of my trading capital. But again, it's very personal what your risk management should be. But again, 3 main components to the risk management approach of this system. And I will highly recommend that you should focus on the set and forget approach, but the second one is move stops to entry at TP1, which is TP1 is going to be the FTA, because a lot of times you see price hit the FTA and that's going to be the end of the move or end of the trend. The third approach of the risk management of using this system is basically move your stop loss up with every new higher low when going long, or above every new lower high when going short. And we're going to be looking at, as I said, more examples of that. Now, what I want to focus on going forward is the second section of this part number 2, and that is common mistakes and how to avoid them. And you can see here that it says impatience and early entry. it should say poor. I'm gonna change that, sorry about that. It just should say poor stop loss placement and then misjudging false breakouts. We're gonna look at this from a perspective of the trade that we just looked at. So let's begin by looking at going into trading view and talking about impatience and early entries. So impatience and entering too early is obviously not only a problem with this system, it's a huge problem in all of trading, right? And I do believe that you can agree with that, even if you're experienced trading, that impatience is probably one of the biggest problems in trading. It can lead to over trading and poor entries and things like that, or just losing trades basically. So talking about impatience and early entry from a break and retest approach. Let's look at this setup example here. So we can look at this and we can say, yes, okay, price has now hit the level. Look at that, hit that low very nicely, right? So you could look at this and say, can you look at the, on the 1 hour, and you can say, all right, so it hit that. We now have a wick right here on that candle. But hit that level, we now have a wick on that level right there. It looks good. And then the second candle is a bullish candle on the 1 hour. You know what? Okay, I'm just gonna enter right away on that one. I'm gonna have stops down here. Now, obviously, I think this would actually been a good trade, as you can see, but it's much better because if you look at the 4 hour, there's nothing about this that says next candle might just go like this. There's nothing about this that says that this is the bounce that you're looking for. This is the level or the reaction. This is the right level, of course, but there's nothing about this type of price action that tells us that this is the type of reaction that we are looking for. If you enter based on this reaction, you might as well just put in limit orders. All right, you might just put in limit orders on the level where you think price is going to hit. So a lot of times, I've seen this happen a bunch of times. I've done it myself. You see price hitting the level, and as soon as you see just a small reaction, you're gonna be like, all right, I'm just gonna market enter right away. I'm gonna put my stop loss below that wick, and then you see that price does something like this, and then it kind of moves higher. It's important to wait for clear confirmation that there is a bounce on this level. If you enter too early, chances are that you are going to get stopped out before that confirmation happens, because this whole level right here is where we expect price to have some sort of reaction. It can move around here for a bit and then start moving higher. So we don't really know where the low of this move is going to happen. And if you're going to have an early entry, you have to have the stop loss very far down, and it's usually not going to be a high risk to reward. So how do we make sure that we don't have that early entry? Well, first of all, you make a plan before entering the trade, and you're going to follow that plan. Anything else other than that plan is usually based on impulsive, emotional trading, right? But if you're only trading on the 4 hour, the way to handle impatience and early entry is just wait for a bullish engulfing candle on the 4 hour. That's your entry confirmation. If you see this, you have a good confirmation that this is the bounce you're looking for. Now imagine if your FTA was all the way up here before taking that move, then the risk to reward of the trade would be quite nice with waiting for that 4 hour candle to close. So what I'm saying is you need to wait for confirmation before entering, and it's very important that you have clear confirmation before entering, because otherwise, without clear confirmation or a clear idea of what that confirmation would look like, it's easy to take impulsive decisions and early entry. Again, going back down to the 1 hour, we can look at this and we can say, is this candle the confirmation that we need? Well, let's go down to the 15-minute and we'll see, well, that's a good bullish engulfing on the 15-minute, but what if we can close it above that level? A close above that level would confirm that this trend is broken, right? It confirmed that this trend is about to break. Do we wait and we see that this candle right there is when we kind of broke the structure, and that would also be a 1 hour candle closing. So imagine that you're seeing this and all you're gonna say is, all right, so a 15-minute candle above this level and I go long. That's my entry confirmation. That's my plan for confirmation and entering the trade. Now imagine if you saw this, right? Imagine if you saw this, right? And you looked at that 50-minute candle as confirmation, and you're gonna say, all right, that's not a bullish candle. I'm just gonna enter on that one. I'm gonna put my stops below that wick, and then of course this happens, and then you get that clean breakout and clean confirmation. So it's very common when trading this system to have early entries, right? And it's also very common for a level like this to break, and that's why I always wait for confirmation before entering, and your plan of confirmation needs to be very clear before entering the trade. And this is how you can help yourself not taking those early entries, which I know a lot of people do, and they get stopped out quite a lot before the real confirmation happens, and usually at that point they've already been stopped out so many times they're not going to take that clear confirmation. So what I want you to do is make a plan for what confirmation is going to look like. Wait for confirmation before entering the trade. If you follow this, you shouldn't be able to take impulsive decisions and have early entries. Now let's talk about stop loss placement. So to be able to place your stop loss at the right level is insanely important when trading this system. So first, I've been trading the break and retest system for about 7 years. So I've started with placing limit orders before the retest, and I've experimented with a lot of different ways of trading this system, and I've come to the conclusion that the things that I've showed you here today is the best way of doing it. You look for higher time frame levels. When price hits those levels, you go into the lower time frames, look for confirmation, place your TP at the FTA, and then your stop loss below the level that created the confirmation structure, basically. So the confirmation structure is this one. Remember how we looked at the 50-minute and 1 hour? We had confirmation on the lower time frames and the 1 hour. This is the structure that created that confirmation. So stop loss below the confirmation structure. Now, if you can, now remember, we're going to be looking at more examples, but imagine that you have a trade that goes like this all the way up here, and then you get the retest. Now, if you can place your stop loss, I'm just going to go down to the 1 hour to see where the confirmation candle was. What's down here. Now, if you can place your stop loss below this low, then that is the way to place it, okay? If that gives you a good risk to reward and kind of makes sense from a technical perspective, using the low of the move that broke the level is always going to be the best level to place your stop loss, because this is a good invalidation level of the whole trend. Remember, you have higher lows. Actually, that is a new higher low, right? But if price comes down here, this is where you have your invalidation area. So that is going to be the best place to put your stop loss if it works from a risk management perspective. Placing your stop loss below the low of the confirmation structure will always be a little bit more riskier, because you might actually get a move like this, right? And again, stop you out before moving higher. What you can do is you can also look at this level, this candle here. This is the candle that broke the level. So using the low of that candle might also give you a good risk to reward, okay? So again, I'm talking a lot about risk to reward, but it's very important that you're not going to be placing your stop loss based on your risk to reward. You're always going to be placing it on technicals. But let's look at the 4 hour. So that's the low of the candle that broke the level. We can also go into the 1 hour. Yeah, that's a very clean level. So the wider your stop loss, the better. The wider your stop loss, the safer. And even though I've come to the conclusion that I'm having my stop loss, fairly tight stop loss here, gives me the best types of trades, I always try to look for setups where I'm able to have as wide stop loss as possible, but still get that 2R or so. So a very big problem here is just having too tight stop loss and poor stop loss placement management, or loss placement strategy, I should say. So remember that the wider the stop loss is always better. If you can't get a good risk to reward with a wide stop loss, it's better to move on to the next trade. Now, this trade setup right here is not the best example, because I'm not able to have a wide stop loss while also having a good risk to reward. So looking at this trade, I would probably take this trade based on that low time frame structure. But as a swing trader, if I would take this as sort of a more swing trading approach, I would not have taken this trade because the risk to reward is just too low with a wide stop loss. And then the third most common mistake when using this system has to do with the breakouts, and that's basically misjudging false breakouts. So again, you know what a breakout is. A confirmed breakout is, well, actually there's different ways of confirming a breakout, but one would say that you could say that a confirmed breakout is when the candle actually closes above the level. That's a confirmed breakout. But what I would say is that I would take one step further and say that the breakout is not confirmed unless you have a candle opening and closing above the level. Okay, so what would that look like? Well, that would look like this. Why do I want to have a candle opening and closing above the level? Well, because you might have the next candle might just not open and close above. It might open above and it might close below like this. So that might be the next candle, right? And that is a fake out. So sometimes you see people using the break and retest system incorrectly by judging this as a breakout, and then they're going to say, all right, I'm going to place my entries here. I'm going to place that as the stop loss, and then that is a TP. And then you see the next candle just goes straight through the level like that. So it's very important that when you see a breakout, make sure that you have the next candle is going to open and close above the level, because remember, to be trading the break and retest system, you want to have a clean rounded retest. You need to have a rounded retest, which means you need multiple candles to close above the level before going long. So by using that approach, it's going to be impossible for you to actually go long on a fake out. So make sure that it's just not one candle, and this also goes back to the idea of impulsive decisions and early entries. Is if you're very impatient, you might just place orders directly on the breakout, and that's going to be a fake out, and it's going to look something like this, right? So you want to make sure that you have candles opening and closing above the level to make sure that it's a confirmed breakout and you don't fall victim to buying an actual fake out. So now that we've gone through the details of the system and the setup, we've also talked about common mistakes and how to avoid them. We now want to look at a couple of break and retest setup examples using different trading styles. And we're going to begin by looking at another example of a simple break and retest using horizontal levels. And for that, we're going to go back to Euro NZD here in TradingView, and we see on the 1 hour here. So we have a strong move to the upside here from Euro NZD, and we might want to say, you know, it looks like it wants to continue higher, but we want that extra confirmation before entering this trend. And for that, we are going to use the break and retest. So here on the 1 hour, we see I've added the horizontal level right here. We're going to go down to the 50-minute to kind of adjust the level a little bit more. And here you can see on the 50-minute, we have some good highs and lows here we can use to incorporate into a horizontal zone or horizontal level. So basically the idea here would be to go long on a break and retest of this level like this. Do we have a breakout? We want to make sure that we confirm this breakout on the 1 hour. So that's the breakout on the 1 hour. And now remember, we want to confirm the breakout with an open and close above the level. And we have that on this candle. Okay, so the breakout is now confirmed that we have a nice move to the upside. We now want to see a retest of this level. The level is being retested right there. That's the retest. Now we have a retest of this general area. We're going to go down to the lower time frames into the 15-minute to see if we have a good, nice reaction right here. And we go down. We're now in the middle of the zone. You can see we add a horizontal line here on that low of the wick. Hits that area perfectly. We now have a nice wick on the 15-minute. Let's pause that. Comes down, hits that level again. And you can see once again we have that sort of rounded structure here down in this level. What would be the confirmation of this? Let's go back to the 1 hour. That's actually a beautiful pin bar candle here on the 1 hour. Let me just add a level here to see if everything looks good in the 50-minute. So when you see this, right, you have a a rounded bottom, a very two nice wicks into this area, rounded bottom. You go to the 1 hour and you have that bullish pin bar candle, pin bar-ish candle with a big wick right here. This combining the 15-minute, this would be the entry trigger, that 1 hour candle right there, and then stops is going to be below that wick, and TP is going to be at the FTA using the candle closes right here. This is a 2.66 R trade. And let's see what happens here, if this works out or not. Look at that. Absolutely beautiful, perfect reaction to that level. So that's another example of a break and retest using horizontal levels and using the lower time frames for confirmation, and then putting stop loss below the low of the confirmation structure. And here we have a setup example on a break and retest using a trend line, or in this case a trend line area. So you see I have a trend line right here. You have well, you do have an open and close here, but this is sort of a fake out. So we want to make sure that we're not going to be trading a move like that. So right on, let's see, on that candle, we have a breakout. Now let's see if we can get an open and close. And there we have an open and close. This is now a strong breakout. You can see the difference between that breakout and this breakout. Now what we want to do is we want to see a retest of this trend line area. Do we get a retest? Right there we have a retest. Let's see if we have any bullish reaction to this level. That's a bullish candle right here. I'm on the 15-minute. We might want to go down all the way to the 5-minute, and you see right here, that's a pretty good reaction right there as well. Let's go back to the 15-minute. I would say that that could be a decent confirmation of a break and retest of this level. You could enter on that candle right here. Stops below the wicks, and TP at the FTA for a 1.9 R trade, and that's going to be the trade. So a break and retest of a trend line. Now interestingly enough, if you remove this trend line and you add a horizontal level, well, this is actually also a break and retest of a horizontal level while also waiting for that confirmation. So a lot of times I see that a break and retest setup on a trend line is also a break and retest of a horizontal level, and that confidence is actually pretty good. So if you do find a break and retest of a trend line, try to see if you can also find a break and retest of horizontal level where they both align. That's probably the at least in my experience, that's the best type of trend line break and retest, where it's also a trend line where it's also a break and retest of a horizontal level. And finally, we're going to look at an example within a range. Okay, so you have a possible range forming here with range lows, range highs, and range EQ, the middle of the range. And you can see here that Euro USD have broken above the range EQ, and if it comes down for a retest of the middle of the range, we can expect price to bounce here to use this level as support for a move back up to the range high. So let's see here if we can get a test of that level. So you can see this is now the first test of that level, and we can either wait for confirmation on the 1 hour. You can see right here, I think that looks like a solid type of confirmation. Let's see the next candle. Yeah, you see that next candle just goes crazy. So on that candle, we can also look at the 15-minute. What would confirmation look like here on the 15-minute? Well, we did have deviation to the downside and then a good move here. That's a pretty good candle. So this trade would look something like this. We're going to TP at the FTA here. FTA probably best to be used on the 1 hour right there, and then stops either below that wick, that would still be a 2R trade, or below the range EQ for a 3R trade. So this is how I would trade ranges using the break and retest. I would trade it based on the range EQ, and then if we have, you know, a hit of range highs, maybe something like that, and then break lower, and then we have that retest of range EQ right there for a move lower, and on this trend within the range, if you will, I would enter right there, stops either above that high that would be perfect, right? That would be a perfect short within this range. So as you can see, there's many different ways of applying the break and retest. Again, I would highly recommend that you look for trending markets using only the horizontal levels, using the break and retest, but you can apply it to trend lines, use simple horizontal levels, or even ranges. There's many different ways of trading this system, as you can see.